Hello everyone, I'm Faidra Mavrogiorgi, journalist and owner of ESGstories.cr, and I'm glad to be here with you today to talk about a very interesting issue that gains more and more popularity nowadays. And of course, I'm talking about ESG criteria. So, in the next hour, we are going to discuss about the future of this criteria and socially responsible investments. But first, let me introduce to you our panelists. We are pleased to have remotely with us today Mr. Mamadou-Abou Sarr, the co-founder, president, and chief executive officer of V-Square Quantitative Management. In physical presence, Mr. Antonis, the director of environmental management and sustainable development of Hellenic Petroleum Group. And of course, Mr. Kostas Andriosopoulos, professor of energy economics at Audencia Business School, chairman of the board of energy transition of HAEE, and president of the energy committee of AmCham. Hello. And now, in order not to waste your time, I will give directly the floor to Mr. Mamadou-Abou Sarr.
Great. So first of all, I'll check if you can hear me well. Is that the case?
Yes.
Okay, so from Chicago to Athens. So I will share my screen so you can see the slides. So bear with me, and then we'll kick off the conversation that we have today. So share screen, and then do that. Here we go. And then you should be in a position to see the slides now. Can you see the slides on your side?
Yes, of course.
Wonderful, great. So a pleasure and a delight to be with you virtually. I had a pleasure to be there physically a few years ago. It's an excellent conference that I recommend highly. And so we're going to dive straight into the topic of the day. And so you asked the question around responsible investing, and I like to kind of broaden up the scope because responsible investing is kind of a subset of what we call sustainability, and underneath which you have environmental, social, and governance factors. And I think given all the headlines we've seen over the past few years, it's not a niche market anymore. To give you a sense of the magnitude of the market, today you have around $35 trillion of assets that are integrating in one way or another ESG investment decisions. And a better proxy will be to say that 36% of the money that is professionally managed around the world already integrate these factors. So let me kind of walk you through 4 trends that I think are interesting for us to assess. The first one, I call it know what you own and own what you know. And the reason why I'm putting it as a trend is that with the popularity of ESG investing, it creates a lot of confusion for investors around which benchmark to select. How do you define ESG factors? How do you report? And I'm sure you've seen at the EU level a lot of new regulations that now are assessing how to look at the green taxonomy, SFDR that looks into reporting and factors on ESG to avoid a phenomenon that we call greenwashing, where a lot of managers were self-labeling their capabilities being green without changing their investment processes. And so the concept of know what you own and own what you know requires asset owners and other parties to do their own due diligence, obviously to work alongside other specialists in the marketplace, but get a better command around what they are trying to achieve, and if ultimately the indexes they select or the portfolio managers they opt for are actually doing the work they are supposed to do. Because we are trying to find a new way to channel finance, right? Working capital in the market. And it is important to align that with very specific KPIs. The second element, I know the conference I've covered that at length, is the notion of climate risks. I think there is a better sense that there's great urgency. I like the Fit for 55 that kind of break down into phases. How can we get to net zero? As we kind of head into COP26, it's important to get a feel for what we need to do between now and then and the next following years. There's a lot of pledges that have been signed up by large managers, oil producers, and so on. Now we need to move from pledges to plan and actions, right? These are kind of the 3 steps. Pledges are great, I welcome them, but I think it's about time to actually have tangible actions to lower footprints across the board and achieve a low carbon transition. Another phenomenon is what I call no S without G. And S stands for social changes and G for corporate governance. There is a greater sense that human capital should remain at the epicenter of any businesses, regardless of how you operate. And then the awakening of the past few years with the pandemic put a sense of urgency on putting S of ESG, not only at the center as it already is, but even more focusing on human capital, diversity, and how can we make sure that the workforce is an integral part of the transition going forward. And last but not least is the notion of materiality. It's a topic that I'm passionate about as a portfolio manager and a co-founder of an investment firm. Not all the E, S, and G factors are financially material. And it's very important to emphasize that, in a sense that when we make investment decisions, we have to be very upfront with investors by telling them that only a subset of environmental, social, and governance factors have an impact on either risks or performance metrics. And so as you assess a plethora of options, it is critical to zoom down on the ones that are impacting risk metrics or alpha metrics along the way. So these are kind of the 4 trends that I have that I wanted to share with you. And on the slide here, you have a nice coverage of the growth pattern in terms of number of ETFs, which are exchange trading funds that have grown substantially over the past few years. And the fact that today you have around 3 million indexes. Think about it, 3 million indexes that are options for investors to get exposure to the marketplace. And it is important to simplify the matter, offer greater transparency on ES and G factors, and ultimately help the industry move towards a better way of being steward of capital and also channel assets into green economy. So let me pause here and make sure that I let enough time for all the other panelists to share their points, and I'm looking forward to Q&A at the end of the conversation. Thank you.
It was very informative, but before that, I will give the floor to Mr. Antonis Mountouris.
Thank you very much for the kind invitation and congratulations for this high-level event, first of all. I will briefly present our view on ESG in the framework of energy transition as an industrial energy company. So first of all, I would like to, next page, please. Okay.
So use this one? Yeah.
Use this one, okay. So this is our group at a glance. We have a variety of we are a dynamic group holding a leading position in the Greek energy sector. And we have a wide range of activities, including refineries, including supply trading, including petrochemical production, and natural gas and engineering section. We have 3 refineries in Greece area, in Aspropyrgos, LFCs, and Thessaloniki area, which accounts for 57% of the total capacity in the country. The company also operates 1,700 petrol stations in Greece and almost 300 petrol stations abroad in Serbia, Montenegro, Bulgaria, Cyprus, and Republic of North Macedonia. This is very important because the most important thing is that the value creation in our group. Here you can see some significant data about the direct jobs in our group, amounted 3,460, and all this significant added value for the Greek economy, estimated at 2 billion euros. And also in the core strategy is the supporting of the local communities in which we operate. In recent years, regarding our social program, the young generation has been at the center of our programs, and we have been investing also in it by providing scholarship and numerous employment opportunities. So for us, what is the ESG and what is sustainability? Because in previous years, many companies use the term sustainability or corporate responsibility to refer to strategies or programs that investors today commonly use the term ESG to describe them. ESG generally means for us a broad set of environmental, social, and corporate governance considerations that may impact the company's ability to execute its business strategy, to create value over the long term, and also to secure the company's license to operate. While ESG factors, sometimes called non-financial, how a company manages them without a doubt has measurable financial consequences. From a management perspective, integration of ESG dimensions of performance makes a company more resilient in an increasingly more complex, interconnected, and dynamic business environment. But what is the inherent value of ESG here? Here you can say the significant advantages of ESG implementation in our strategy. If we demonstrate transparency and effective management and enhance the company's ability to attract long-term investors, capital, and favorable financing conditions. Also, by creation a deeper understanding of stakeholders' needs, could drive innovation and enhance market differentiation and competitiveness. Compliance and risk management also address mandatory reporting requirements. We have an increasing reporting requirements in recent years on financially material factors and mitigate compliance risk related to financial reporting regulations. Also, of course, demonstrate corporate commitments to responsibly managing ESG impacts, to improve employee perception of the company, helping to attract, retain, motivate, and align new and existing employees. In our group, our approach to setting a business directions based on ESG criteria for the environment, society, and corporate governance has been redefined and constitutes a central pillar of our plan to achieve sustainable development. The group is rapidly transforming itself based on a new strategic plan, business plan for transformation and sustainable growth called Vision 2025. Vision 2025 aims to strengthen our position in the industry, making our activities compatible with a new international environment, enabling substantial growth in new, cleaner forms of energy, and at the same time, multiplying the value we create for our stakeholders. The strategy is based in those 5 key pillars, defining clear environmental objectives, realigning business strategy and capital allocation to these objectives, establishing an appropriate corporate structure, upgrading corporate governance, and adapting a new corporate brand that will be soon available. Considering environmental targets, we have a clear target for a 50% reduction in the carbon footprint by 2030, with a commitment to net zero by 2050. The 50%, including a reduction in Scope 1 and Scope 2 emissions, about 30% through energy use optimization, through green electrification of our production facilities and low carbon fuels, and also an additional 20% compensation by further development and implementation of renewable investments. Here you can see some, in details, some numbers, some data considering ESG, our ESG performance. This is our performance that is measurable, manageable, actionable, and reportable. Here you can see under the environmental pillar, the avoidance of 1.4 million tons of carbon dioxide emissions, the CDP B- management level according to the former Carbon Disclosure Project questionnaire, also the reduction of main air emissions indicators. Under the social pillar, you can see the significant high average employee retention rate, the reduction of process safety event rate, the thousands of man-hours of training in health and safety issues, and also in governance, you see the independent verification of the sustainability report, the very high coverage of the annual internal audit program in our activities the last 4 years. And here you can see more and more examples of ESG performance that investors can evaluate and see in details in our report. So our main strategy our main strategy for the future is one of the key strategic development areas is the development of renewable energy. Here you can see some renewable projects in operation in Pylos Messinia, the wind farm of 7 megawatt, and also the photovoltaic park in Thessaloniki industrial area of 19 megawatt. Renewables have competitive economic returns. They diversify the energy mix. They support short and long-term risk hedging by reducing carbon dioxide emissions. We're developing an extensive diversified energy portfolio focusing on renewables and a target of 0.6 megawatt as a medium-term target.
Mr. Mountouris, you have
Yes.
1 minute left.
Yeah, okay, thank you. I will finally sort it. Here you can see the target for 2030 is 2 gigawatt, and also our recent picture for the Kozani photovoltaic project, our first large step towards renewables. But you can see all the details about our performance on ESG in our sustainability report. Ever since 2005, our group has been publishing an annual Sustainable Development Corporate Social Responsibility report that follows all the widely known frameworks, GRI, Global Reporting Initiatives, also the 10 principles of the United Nations Global Compact. Also, we have actively participated to the Greek Sustainability Code development and have reported according to the code since 2015 and listed among the 25th top most sustainable companies in Greece in 2020. Finally, Hellenic Petroleum, as a company listed in the Athens Stock Exchange, has for the first time in 2020 adopted the ATHEX ESG reporting guide. And the future challenges. Here you can see 2 main challenges for us. First of all is sustainable finance. Let me tell you about the formal way and a mandatory way that ESG and sustainability considerations, it's part of financial decision making. And also the most important thing is that the lack of a common framework for ESG reporting. And it's very important that recently 5 framework and standard setting institutions of international significance like CDP, CDSB, GRI, Integrated Reporting, and SASB have come together to show commitment to working towards a comprehensive corporate reporting system globally accepted to enable sustainability data to be structured for sharing and comparison. This is very important considering the fact that sustainability disclosure standards capture drivers of enterprise value creation that are not already reflected and disclosed in the annual financial accounts. Thank you very much.
Thank you very much, Mr. Mountouris. I have many questions for you too. Very interesting insights on this topic. But first, I will give the floor to Mr. Andriosopoulos.
Thank you very much for having the opportunity to have this discussion here around ESG. As Mamadou mentioned earlier, I think there is a lot of emphasis in many cases given on the E of the 3 words there, what we do about the environment. And a lot of times the effort is focusing on how to minimize the carbon footprint of a company, ideally in the whole supply chain, as we said, to try to reach ideally the net zero targets that we have listened also from the presentation of our previous speaker from Hellenic Petroleum. which means that there is a new environment now for the whole market in terms of investments in the renewable energy sector. That's why we see an influx of capital on the sector. Many companies that we wouldn't have thought that previously would be interested in investing in photovoltaic parks or wind farms, for example, they are now keen to invest, and I would probably say in many cases with quite low returns because it's not happening from a financial point of view purely. Obviously, they don't want to lose money on their investments, but they're willing to get a smaller return compared to others because they are achieving as well a target, which is the improvement of their ESG criteria in general. I'm surprised from Mamadou. Maybe he can repeat to us later on when he intervenes how many indices there are in Dubai. He said thousands or millions. I don't know. So it's
I think thousands.
Thousands of indices. I think it shows the interest in the whole industry, and that really everybody that it is in the finance world is integrating this criteria for ESG now in their decision-making process, setting strategies, going out there for funding, or deciding on their future investments. So it shows the importance of the topic. It shows the importance of all three letters, both the environmental, the social, and the corporate governance perspective that all companies now need to follow. So with this, I will just end on what is happening in our part of the world, that very recently, as it was mentioned before, the Athens Stock Exchange has also published our own national, let's say, ESG index, that all the listed companies in the stock exchange, they are following now the index, and we have a measure of looking their performance in a more, let's say, coherent and transparent way. This is also another important element we need to discuss. With this, I don't want to take much of the time with my introductory remark.
Okay.
Let's spend a bit more time on questions.
Let's move on the Q&A part of this section. And I will start with you, Mr. Andriosopoulos. As environmental, social, and governance performance becomes more prominent, institutional investor, asset manager, financial institution, and other stakeholders are increasingly looking at ESG factors. Could ESG improve the competitiveness of the Greek energy companies in the view of the energy transition?
I think this is, I guess, at the heart of the strategy and the decision-making process of the company. So, as I mentioned earlier, trying to target this net zero emission targets by 2050, with all the European regulation, all the global trends that we see out there, moving towards this green energy transition, companies would be extremely supported, I would imagine, by improving their ESG performance based on various criteria or indices that would be recognizable in every sector. So speaking about Greece with a kind of the Greek benchmark that we have also from Athens, which would make them then more attractive to a broader set of investors, that they would be keen to invest in the best performing ESG companies. So that would make it easier for them to attract lower capital, which could be deployed then for greening their portfolio or improving even further their carbon footprint.
Thank you. Mr. Mountouris, what part of the group's total investments will regard the ESG sectors?
Yeah, a significant part from now on. We have announced that according to our investment or future investment plan, approximately that will be about 4 billion euros. Approximately 50% will be directed towards the development of new activities like renewables, hydrogen, and biofuels. And the remaining one will focus to the modernization of the existing facilities.
Okay. Mr. Sarr, in a few words, what comes to your mind when you hear socially responsible investments and how companies can avoid the famous greenwashing? Mr. Sarr?
Here we go. Well, thanks for the question, and I think it's important to put it in the context of what socially responsible means, because under the term socially, there is already a definition of what is meant to be deemed socially responsible, and I would say it's an old term. We don't really use that anymore in the way I operate. That's how the industry started. So a set of activities were deemed to be socially responsible, and the one that were deemed to be irresponsible usually were classified as sin stocks. So alcohol, gambling, adult entertainment, and so on. Fast forward to where we are today, the acronym ESG came out around 2004 after a report from the World Bank and was used as a way to describe a broader set of issues. Now, the notion of greenwashing for me could be addressed by putting greater scrutiny under the definition, because today you have so many layers of what ESG is. So I will welcome practitioners to use the definition of the EuroCIF in Europe or the US CIF in the US and take the description of what ESG is, right? Because it's important to actually speak the same language. Avoiding greenwashing means that the regulator will have to create a better oversight, that auditing companies will have to also put a stamp of approval of what you label as ESG as per se. And last but not least, the buy users, the consumer, will have to be better educated to make the distinction between a manager with ESG credentials and integration and another manager who's just doing what I call marketing gimmick and just to attract capital, right? So consumer education, critical part of it, oversight from the regulator, an important step from our perspective. And last but not least, going on the lexicon, these are the three steps that I think are a prerequisite to actually address greenwashing across the board.
Mm-hmm. Thank you. I have a question addressed to Mr. Andriosopoulos. Companies are transforming their business orientation into more sustainable approach. What is the contribution of ESG towards this direction?
I think, as we have heard, sustainability is quite important. So, making a business sustainable, thus competitive as well, you have to improve overall your ESG rating, which means that ESG overall would help the company move forward and make sure that it drives itself through this new environment that we are experiencing now, where competition is quite fierce, and it would definitely help.
Mm-hmm. Mr. Mountouris, how easy is for a heavy industry such as HEL.PE to adopt a more green strategy and to make a turnaround?
Yes, it's not an easy task. Of course, the main challenge here is to integrate the short-term goals, namely optimization of the current activities, to the medium and long-term goals. That is a total transformation of the industry and integration of alternative fuels as a feedstock to the industry. I think that this is the main challenge, and also there are main challenges regarding the availability of some low-carbon feedstocks, for example, biomass, the availability of low-carbon technologies that now are not available, but will be available in the near future. So I think that these are the main challenges and the main difficulties in order to transform all the industry to be the zero, to be in a main part of the zero economy, zero carbon economy.
Mm-hmm. Do you believe that ESG concerns only big companies, or is it something that that all companies must take into consideration, despite their size?
Very, very good question. I think that ESG are for all companies, definitely. But the role of big companies is to share the best practices, is to, let's say, to participate in common platforms. For example, let me refer to a practice of Hellenic Petroleum that participates in the Sustainability Performance Directory, that every year we try to share some best practices and try, let's say, to motivate all the supply chain in order to follow and adapt new practices towards ESG strategies.
Okay. Mr. Sarr, there is a perception that in the upcoming years, the high returns on ESG investments will decrease. What do you think?
It'll be interesting to ask you for your source on that quote to understand where it's coming, because it's counterintuitive to what I see on the ground. Obviously, I'm biased. I run an ESG specialized boutique, so I'm only receiving inquiries about potential capabilities. No, my take is that it is becoming an integral part of how we invest nowadays in asset management. I think it's impossible to think about a different way of investing going forward, because it's the governance part of it always being part of how you assess companies. If you're a fundamental manager or quantitative manager, you always looked into governance of companies that you invest into, the leadership team, and so on is always part of a matrix. Now, the S part, the human capital part, there's different layers to it that are today assessed, right? And I think it's also a critical part of assessing success, and also putting the human capital at the epicenter of business successes and so on. Even though technology played a critical role, technology work in tandem and cannot work without human capital. So for me, that's why I believe it's here to stay. And on the environmental part, there is a sense of urgency around climate change. And climate change is a macro issue. Not a single country alone will be able to address it. I call it a zero-sum game. So we all have to move in tandem to address it. And to the extent that the problem is palpable, that the global warming is visible, there is physical risk, transition risk, ultimately we have to address it. And if we have to address it, it's actually a multi-year, multi-decade effort. And therefore, it's something that is here to stay. So my answer will be what I see on the ground, tremendous growth. I don't think that was going to taper down. Maybe we'll not use the acronym anymore. It will just become investing. And therefore, I may not have a job as an ESG specialist. I will just be back to what I started to do when I started my career. But I believe that it's something that is here to stay, here to grow, and becoming at the center of how we think about investing.
What do you predict will happen in ESG area in the next 5 to 10 years?
Gosh, I wish I had a crystal ball, but it's a hard one. I'm thinking about what is going to happen next week. But in 5 to 10 years, well, if I were to put a fast forward view, we moved on what I call ESG information, where companies like oil and gas and other sectors had to disclose information, to the era of integration, where managers such as ourselves were taking the data to build portfolios. And now my take is that we're moving to the era of impact. I think now people are asking, okay, now you've disclosed, now you integrated, show us tangibly how are you impacting the society. Now, it poses a bigger question on the role of corporations, right? If we think about an old model of why corporations were created, and they have shareholder, it was ultimately to maximize value for shareholder, right? Now, if we want the companies to also play a societal role that impact communities where you operate the environment, then it creates a different conversation around the role of corporation in the world, right? So for me, the fast forward will be around access to data, using of AI and other technology. It will be about innovation. I think, especially in the oil and gas, the presentation we had today showed that it's a critical part of how companies will extract oil from the ground going forward. And innovation will be a critical piece of it. And if you think about climate risk as well, carbon sequestration and other factors will also play a role. So my fast forward view, AI, data, and also greater innovation across the board.
Okay. And last but not least, Mr. Andriosopoulos. What are the main challenges to to the continued growth of sustainable investing? Are the Greek companies ready for this?
I think that Greek companies have been preparing recently for this new wave of ESG analysis and respectively investing in various opportunities. But given the fact that if we focus on the E side, in Greece we have had a lot of developments in terms of renewable energy investment lately. Many of them, they are focusing there. That starts from what I said in my introductory remark. But I think we're still lacking a little bit on the S and the G side. So we need to put a little bit more effort on making sure that we understand the dimension of the social impact that all of the decisions may have, and of course do a lot in terms of improving our governance structure. We are a shallow market. We're not a very deep market like the US market, where companies are scrutinized daily by investors and by analysts that they really kind of drive the developments on that side. So here in Greece, we're still lacking this continuous pressure, if you wish, from outside. But we recently see, and with the developments in Athens with the ESG rating, that indeed even companies in the Greek stock market, even the private ones, because competition is there for the private companies as well, even though they don't have the same scrutiny with public companies, they will need to improve their ESG performance and make sure that they show to investors that they do that ethically, properly, and sustainably.
Mr. Mountouris, what's your final remark?
I think my my motto is that ESG is here to stay, and I always say that because I think that companies have to manage, apart from the financial capital, also the natural, the human capital, the social capital, in order to be the leading ones. Okay. So I think that ESG is here to stay, and ESG is the future.
Let's see. Let's see. Mr. Sarr, what is the main message that you would like the audience to take away with them?
Well, we are in an energy-focused summit, so I'll be remiss not to basically kind of make a statement that energy of tomorrow is encompassing other sources of energy, right? Broader renewables, and part of the energy mix of countries, regions, and even within a company, it becoming just a key imperative, but also a competitive advantage to actually offer other sources of energies. And so for me, the main takeaway attending these type of conferences is actually exciting to see how the energy community is thinking about it more broadly. And then the way you were extracting oil and fossil fuel AV of yesterday, it's pretty much has been. And the future is about energy mix efficiency and low carbon footprint as well. So that's kind of my take, is that I welcome the innovation happening in your space. And I'm always excited to be at a table as an investment manager to provide my perspective.
Thank you. And Mr. Andriosopoulos?
I would just be very brief and follow on the same, let's say, lines like Mr. Sarr, and what has been said earlier, that the ESG is here to stay. Yes, we will be looking at ESG criteria more and more. We shouldn't be focusing only on the notion of investing in renewable energy sources, as it was said. We need to see the whole supply chain. We need to understand the dynamics and the market mechanism in every country, which can be very different. So we have a lot of other sources to be investing in. As Hellenic Petroleum said, 50% of your capital injected in the next few years, it will be on modernizing existing facilities, which means that you are improving assets which we don't want to be stranded. We want to improvement and utilize them and be more efficient and less costly to operate, and at the same time less polluting. So serving the target for the environment and for lowering emissions. So my take is that ESG is very important. We have to take seriously all three letters of ESG and always adapt and see what the market is bringing on us and what the new challenges are to try to overtake them.
I want to thank you all for this interesting conversation. I hope that in the near future we will have another chance to discuss about this hot issue in more depth. Good afternoon.
Thank you.